And welcome everybody to the fourth episode of the 2021 Americas FIXinar series. I'd like to thank Internet for sponsoring this episode, which is the evolution of OMS and EMS for equities. This FIXinar will be governed under the Chatham House rules, meaning quote checking will be in place. If you wish to quote any of our speakers or firms, please ask for permission before doing so. If you have a question and would like to ask throughout the session, please use the Q&A function, which you will find at the bottom of your screen. If you would like to raise your hand and ask your question in person, this can be done for you as well. I'm delighted to invite Heidi Fisher, who is co-head of execution for the Americas at Internet. Welcome, Heidi.
Thank you. How are you?
I'm good, thank you. How are you?
Great.
Thanks for joining me. Just thought we'd do a quick introduction. It's great to have Internet sponsoring this episode. Internet has been a member of FIX for a long time. And in fact, I think you guys celebrated your 50th anniversary, if I'm not mistaken.
We did. Thankfully, we got our 50th celebration in just before COVID hit, which would have made it impossible. But it's interesting when we think back, it's kind of amazing. The fabric of Internet, 50 years ago when we began was all about innovation and clients. And today, as we enter our 52nd year, it's still the focus and the fabric of our company. But we have continued to evolve. And, since our 50th anniversary, we've actually divided our firm into two main divisions. Our expertise has always been across technology solutions as well as execution. And what we've done is we've divided them into two divisions because we realize clients really value expertise and focus. And so Internet Technology Solutions was born, which we refer to as ITS, and Tom Whalen, who you guys will hear from on the panel, is actually globally driving that effort for us for about the last year and a half. And then I sit on the execution side of the business.
That's great. Can you share with us why sponsoring today's FIXinar on EMS and OMS was so important to you?
Sure. Internet, we pride ourselves as being the first fintech in the business, and we continue that tradition today. And being ahead of innovation is really important to us. And how does that start? It starts with dialogue. And so when we think about our client base, which spans the buy side and the sell side across both our execution and our technology businesses, we know how important it is to bring people together to talk. And through that, we're able to get the information we need and to brainstorm to be able to innovate and come up with the products of the future and the things that are going to make us all better at our jobs as we kind of look forward and think ahead.
That's great. So what would you like the delegates that are in here today to learn from this FIXinar?
Yeah, I think our main goal is to get people thinking. And, you guys have put together a great group of panelists today who come from many different mindsets and backgrounds. And, as I just talked about how important communication is between us and our client bases, I think when people can hear perspective from others, it kind of gets you thinking. And our business is changing. And, this pandemic has certainly changed the way we operate and the way people think about business. And so it's a good time, hopefully, to open clients' minds so they start thinking, how has my business changed? What do I need to be thinking about for the future? And then, that thought process leads to more dialogue and enables us to partner and come together and create the products of the future so we can all, stay relevant for a long time in this business.
That's great. And I think this pandemic has really brought everybody together and that communication can only continue. So without further ado, I would like to introduce Michael Mullins from Charters Research, who is today's moderator. Thanks, Heidi.
Thank you.
Yes, hi. Hi, my name is Michael Mullins from Charters Research. I focus on the trading technology around both the buy side OEMSs, algos, and other technologies that are used throughout the trading process and ecosystem. I'm very much looking forward to having this discussion today. I think we have a great panel in place to touch on some of the key factors that we need to consider, not only for today, but going forward, what we need to prepare for the future. I mean, the market landscape is changing. There's a lot of consolidation on both the buy side, on the sell side. Traders are doing things a little differently today than they used to do. And how do OMS platforms adjust and make it easier for traders in slightly different roles than traditional, and how they align themselves with the service modules and processes that they need to do the work that they need to do. So I'm interested to continue to discuss these topics as they're as we really are entering a new phase of development and evolution in this space. So I'm very interested to have this discussion. I think I could take a moment to, I believe I'll be introducing the panelists for today. So today we have Enrico Cacciatore, Head of Market Structure and Trading Analytics at Voya Investment Management. We have Amy May, Executive Director in Electronic Trading for Morgan Stanley. Amol Toper, Senior Business Analyst for Capital Group. Tom Whalen, Global Head of Internet Technology Solutions, or ITS. RJ Weiss, Product Specialist in Workflow Technology for Virtu. So thank you very much for joining us today, and I look forward to discussing with you. So I guess I'll jump in. So what I'd like to do today is I'd first like to just do an overview of some of the key themes I want to focus in on. I think there's three in particular, but there's a lot of sub-questions that come from this. But first of all, I'm going to touch on automation. This is becoming a bigger deal as we go forward, as less traders have to do more heavy lifting across a lot of other automated and multi-asset workflows. I want to talk a little bit about the aligning of clients that are in specialist groups with best fit workflow solutions for them. I'd like to talk a little bit about the how far are we in our ability to interoperate with a growing range of microservice containers or modules that allows traders to access what they need, the tools that they need when they need it. That's one big area. Another big area that I want to dig into a little deeper is the actionable analytics, the delivery of those analytics throughout the OMS. And then are we seeing performance outcomes as a result of all this effort to deliver real-time analytics to traders? Is it really working out? And are we better served with the traditional rule-based, methods, or, are machine learning-based techniques starting to show more promise? So I like to touch on that a little bit further and get some insights. I'd also like to touch on the need to continue to push further in the multi-asset space. I mean, there's a lot of work that needs to be done there. Some firms are a little further along than others, but it's definitely the future. As active asset managers reach out into trading across regions and asset classes so that they can provide additional value for clients. Okay. So first, I'm going to touch on at the beginning. So maybe I guess I'll target this question to Tom. So So where do you see automation popping up the most in OMS workflows?
Sure. Thanks, Michael. I think that the broker wheel, the advent of the broker wheel, the embracement of broker wheel is, I think it's, clearly here. It's probably the most ubiquitous really automation when we, I think when we think about equity trading. The first bit of automation, I think, is really broker wheel. And it makes a whole bunch of sense, right? It allows people to really sort of explore and exploit, their better providers. It creates a good competitive environment where people are able to really focus on performance and what the client is exactly after. I think it's increased dialogue between the buy side and sell side. It's a good way to test out a new provider that you might want to put on your electronic platform. At Instinet, we think about broker wheel really in the context of workflow automation. And the Heidi talked a little bit about us splitting our business, but I think one of the interesting places that we've sort of resided in the market is someone with a lot of rich front end functionality, but also brokerage downstream of that. And so that always allows us to, partner up with clients and provide them opportunities to sort of engage the markets the way they would choose to and the way they see fit. So when I think about workflow automation, a lot of times it might just be imparting a piece of information that the buy side has that they want to then utilize inside of the front end by way of a manual action. So we think about it as a little bit of a spectrum. We were always sort of focused on the workflow of our clients and what they might be doing. They might be, looking to better align their trading with their investment practices or process. They also might just be, looking to sort of make themselves more efficient, more operational. Take the practices that they employ sort of on a regimented way and just help them sort of make that more and more automated. I think the buy side, I think the traditional or classic buy side is doing a lot of what I sort of think of, I don't think they've fully automated. I think even broker wheel, much of the buy side is deciding this order should be a VWAP order and that order should be an IS order. And, maybe that order would be best in the dark. But I think a lot of that is still being done at the hands of a trader and not necessarily a process behind it. Broker wheel from an automation standpoint, I also think the big thing that we get there really is, sort of the randomness of sending orders out to providers. We do some other interesting things where we drive a little bit more, maybe discretion around where the order is going to land, or work with clients to sort of understand that certain types of orders should go certain places and other places, where it's not just necessarily classic broker wheel. But I think, for the most part, a broker wheel is at this point is doing, pretty simple things in terms of where the order flow gets automated out to, or what the wheel is really trying to achieve. And then I would say the other thing that happens is we definitely see some demand from clients where they're looking to engage with, say, an API to sort of reach into the EMS and, provide instructions or provide some IP that might be coming from one of their internal systems to sort of color how the order should then be managed out of the EMS. And again, that's a little bit of a quasi-automation. I wouldn't say that we have a lot of clients that are really reaching through and controlling an in-flight order and, switching gears with that in-flight order based on some external process or system. But we definitely have external processes and systems outside of the EMS that are imparting, further instructions or information against an order that might then be managed or employed by the trader.
I see. So, Enrico, what are you seeing on your side in terms of the types of automation that are popping up the most in your OMS workflows that you're seeing?
Sure. Yeah, basically what Tom, I align with that. And the question you have to ask is, what is automation and what is the purpose of it, right? Automation is really taking, whether it's some sort of analog or digital kind of information, right? And utilizing computational power to capture a lot of data and use it in a much more efficient, effective manner, right? Whether it's market data, whether it's venue data, performance, any of those things, right? And automation is making the trading desk more efficient, allowing to capture more data, right? And we talk about, Tom talks about the algo wheel, right? I think the next evolution really in the algo wheel, again, it depends on the construction of the specific asset manager, will be in different ways. One will be collecting intraday market information relative to historic and creating either orders that get kicked out of the algo wheel that maybe they're not conducive to the current market conditions, whether it's news related, market related, whatever it might be, or populating on the EMS, OMS of information that could be important to what, say it gets kicked out, how this order should be traded, something like that. So that's sort of the first part of it, right? That you go. But I think the big thing that we're both the buy side and sell side need to come together is we have historically been siloed with our information, especially from a broker standpoint. All the data kind of gets funneled through the broker, whether in even the EMS or OMS, it needs to be much more distributed. If you look at the military F-22, F-35 jets aren't any faster. A lot of the ground equipment tanks haven't really changed. What's changed is data within the military and distributed not only the different branches, but information that the F-22 sees in the sky, or a ground troop, a special forces guy sitting on the ground, communicating how many soldiers, what are they carrying, and stuff like that, and then relaying that information to the jets or maybe to artillery units, in the back. Same thing you can apply in financials. We need to be much more distributed in how we disseminate our data. What does that create? It allows for segmentation of best of breed, right? When we talk about multi-asset classes, well, an EMS has unique qualities that it can do much more efficiently than the OMS, and the OMS can have some different things. If we're able to distribute and permission the data in a much more centralized, focused, and allow connectivity, and Tom talked about this, like an API, and leveraging our common communication, right, which is fixed protocol. There's this thing called fixed orchestra, right, that translates fixed protocol, it's a multi-asset language, into a machine readable text, right? I think that's the key where we have to go. And what that's going to do is allow longevity of automation and a much more straight through process from optimization of the actual portfolio down to actual fills at the venue. And so that's where I see that, the future going is much more access and democratizing data so all users can do it. And it's not just centralized with certain participants.
That's interesting. So Amy, I was just interested in your thoughts on, not only the automation that is popping up in the OMS, but from your point of view, what tools are delivering the most value, for the buy side trader?
Thank you, Michael, and welcome to everyone. I would echo what Tom and Enrico have said so far, in that, the algo wheel, it has been, certainly not new to our clients and to the fintech providers on the call. It's been around, 5+ years. It's ubiquitous, as Tom said, and I think we are still at the very humble beginnings of the use cases for AlgoWheel. From its very simplest application of managing commission wallet or dealing with nuisance orders, I think we've addressed, frankly, the low-hanging fruit of how to make, a trader's job easier, and frankly, some operational efforts as well, how to make those functions easier. But the more complicated problems of, weaving back in performance data, or as Enrico just mentioned, intraday data versus historic data, and changing and adjusting your order on an intraday basis, I still think we're very much in the beginnings of that, and have seen few clients actually adopt AlgoWheel automation beyond the very simplest of use cases. And I think any of the fintech providers that are on the call today would agree with that. What they envision the functionality to be is a small subset or percentage of that is actually being used today. So it's just like a lot of things we've seen in recent times. You can develop a vaccine, and how do you get it to everybody, right? And so we've developed this technology, and really how to get it to a broad client base and actually make it useful and impactful for them is a much more time-consuming and effort-intensive process, right? Of sitting down with a desk, understanding their individual workflow, and weaving it in to make a useful impact. So for that, AlgoWheel, I still see a lot coming down the pike. I will say, from a broker's point of view, we don't necessarily love AlgoWheels, right? You get backed into, a square peg into a round hole, right? Sort of the uniqueness that brokers can offer in their algo suite, gets frankly eliminated, and you're contained to the set of parameters that all brokers can support. So it does diminish to some degree a broker's sort of unique, distinct advantage. So that's, I think, one thing that we'll continue to see over time.
Mm-hmm. Do you adjust your messaging for the clients that are like small and mid-sized clients versus the large clients with a lot more order flow? Obviously, the ability to generate, proper conclusions from the results is heavily dependent on the amount of the order data that you have. Does your messaging to clients change at all from when you deal with large clients versus small, and perhaps more warning the small to mid-sized buy side that the data levels needed to get statistically significant proper conclusions versus false conclusions is harder with that? I mean, how is the messaging being managed between those that have the data and those don't have sufficient data to truly run it properly? How do you manage that?
Is it back to me, Michael?
Mm-hmm.
I think the messaging is the same, and I think everyone would agree. It takes a lot of data to be confident in your conclusions. So that message is always the same. And I think for clients that are, what we would always say is, let us see your data. Show us the data so we can show you ours and can compare it. So yeah, I think that is a consistent message, but certainly you need a lot of data to come to a strong conclusion. So a single trade in a single month is not indicative of long-term performance. Right.
Amol, what is your take on all this? What is your approach? Do you have something unique going on your side, or what are your thoughts on this?
Yeah, sure. Thanks for having me here. So ours is a Capital Group is a buy side, and we, as a very conservative buy side, we have recently embarked on this journey of doing automation for our traders. So essentially, the reason for starting off automation was to help our traders get rid of the nuisance type of orders that they were facing, and that was a barrage of, I would say, 80% of our orders would be nuisance orders. Meanwhile, 20% was the real, the meat of it. So we definitely wanted to give some time back to the traders to engage in their work. Now, when we started on this journey, we started looking at different products, what we can use directly from the vendors. And since ours is a homegrown system for OMS, EMS, we had to, the best alternative for us was to create our own algo wheel and basically a system that can handle these kind of automated orders, which we started about a year plus back or so. And we're starting to see the good results. Like the flow that we have been able to engage through this automated tool has been exponentially growing. And again, as Amy mentioned before, let's get the low-hanging fruit out first. And we got that with our small orders, like less than 1% ADV and all those. As we are seeing more and better results, we are more encouraged to add better volume, bigger size orders to the same wheel. Although it's not going to happen right away, it's going to take over a period of time. And the reason for that is basically collecting data, because we want to give ourselves enough time so that we understand how what's the better performance that we're getting from which broker. Because up until now, everything was done mostly from the trader side, like where there is an existing relationship, the trader automatically goes to a particular broker or not. So this is our first foray into a place where we can actually objectively figure out which broker is standing out better than the other. And basically the analytics part is definitely going to be very helpful. So that was our, the second goal for doing this. And as we are progressing further, we are getting more and more data. And one thing that we wanted to do as a part of this automation was give the power back to the broker. Like, instead of us dictating which algo you want to go with or what parameters I want to set on my algo and have you execute it, we are giving out the benchmark and saying, why don't you figure out what best you can do to hit the benchmark, and you come back with, and then we'll, at the end of the month or the quarter, we'll analyze the results across all the brokers that we are engaging with. So it's a journey that we recently started, and it's very encouraging from what we see right at this point. And our trading team has been more, they are asking us to do more on that, in that front.
Thank you very much for that. There's a lot of talk about the need to interoperate with microservice containers or modules to bring in tools that, very, purpose built for specific workflows. But a big issue is always the standardization of the communication frameworks. How do you see this sort of playing out in terms of, the efforts to standardize how applications are communicated? And we know Fix has been a standard for a long time, but some others have been brought forward recently. And this is key to be able to continue this push forward to properly interoperate with key modules. So what are your thoughts on this? Maybe I'll ask May for her thoughts on this in terms of our efforts to interoperate with modules and standardize application communications.
RJ, can I pass it to you first as a platform? You're going to be
You're going to be better off
just to kick it off.
It comes up in different places, right? And the two things with automation you try to avoid is that you don't want to introduce bias unnecessarily. And then where you can script things, you want to make it as thoughtful as a human being would have done if they had the time. So for the broker wheel, and Amal is absolutely right. It's the post-trade feedback loop. It's the TCA analysis that's done after that makes the broker wheel work. Because what you'll start with typically is an experiment where there's 4 providers, say, trafficking in the same strategy. But ultimately, you're introducing a bias creep if you don't adjust those allocations based off of how people are actually handling the orders and performing. And you can end up with a wheel where you have just 1 or 2 providers that get the majority of the orders, but you have the data that suggests that that's where those orders need to go. So automation, it lives and breathes like that. It does take review to make sure that it's an organic being for a firm that's doing the same kind of diligence that a human being would do if they were touching every order. Fix does amazing things for us, though, in all types of automation. One specific case for a specific customer segment. ETF RFQs have traveled from chat and IM into systems that are based off of fixed quotation and fixed hit left messages straight into automation in just a few years, which is wild to see. What somebody had to pick up the phone to do just a few years ago can now actually be scripted by these platforms so that it's completely no touch. So that traders, when they want access to a risk price off exchange from a dealer, they can actually take a smaller ETF order and have that script run without anybody out there on the buy side or the sell side necessarily touching that order to make it happen. So you can take general things like an algo wheel, and I think that most any buy side firm can find a great use for that. We find buy side traders tell us it's usually their top few orders on the day that determine their best X, right? So even quite large orders, when you get below that top tier of the riskiness of what they're looking at, they're asking for some form of automation. And then down straight through, processes like RFQs that are a wonderful way to trade certain instruments off exchange that used to be very time consuming, that we're finding automation is actually solving really well. But certainly fixed protocol I see as bar none the way that all of that happens. When you're connecting multiple dealers into the same system, it's a moving target. And fixed becomes our North Star to make sure that we never travel that far away from one another. And Amy, passing the mic to me, it's funny, we're competitive cooperative, right? We find ways to integrate, to give a great experience to the buy side. But obviously we're always changing what we do to try to be the best that we can be. But fixed is that glue that then actually allows us to continue to build these products that can parse out to everybody that the buy side needs to reach.
And so how much development work is being done for what you perceive to be the demand for tomorrow as opposed to today? I mean, when I speak to the buy side and the vendors, there is a lot of talk in the media about, the interoperating and the need to bring in multi-asset trading flows. And if you don't have it built into your system already, you can bring in a module and you can trade something like crypto, who knows what. But how much of your work is being done, satisfying requests for development for more today's needs versus, what you anticipate the need to be in the future, and your ability to anticipate trends and build ahead of time for that, even though they don't currently exist, like a lot of the multi-asset that we see. How does that work in your organization in terms of the R&D you spend on developments that you see coming up down the line, like 1, 2, 3 for years further? What are your thoughts on that, RJ?
Yeah. So, there's some things that are just an endless march forward. So like the electronification of asset classes like fixed income that have for so long been fairly manual, that is going to continue to shift to electronification. And actually COVID, if you look at the charts, the spikes in the amount of activity on the electronic bond platforms, it follows suit with work from home, because I think it allows us to take a step back and again, figure out what adds value in our day and where there are things that we could be using the machines to make our lives more efficient. So there's things like that where we know where the puck is going and we're going to skate towards it. So like where we didn't have maybe a lot of fixed income capabilities a few years ago on the platform side, we know that we need to get there because it'll never be equity-like, but it can be managed through the same types of systems. And again, it all really leads back to fix. I see a lot with machine learning and AI in different ways that automation can come to a higher level and really take over processes for a firm. Virtually I don't see that as much. I think of Asimov with the rules of robotics, and the first rule is just do no harm. And we get asked so many more times by customers about making sure that the automation that we're creating is safe and resilient. Figuring out contingencies for when things go wrong. If an order comes to automation that shouldn't be there, or the market's too hot, or there's a technical problem, how do you recover elegantly without the whole show stopping? I have to say I've got to get 10 questions on that versus 1 in terms of how to create newer creative ways to necessarily execute an order. The rules we build, they tend to be remarkably simple with the right protections. But certainly there's other places though on the multi-asset class front, whether it's driven by MiFID out of Europe with such a strong best X sense, or in the US with just the consolidation of desks. Certainly there's cases there too where we just have to learn new tricks because customers are going to be outright demanding that each of the asset classes they trade doesn't take them that far out of the 21st century.
Right. So I can see too that, performance pressure, I can't remember when it's been this intense among the buy side. When I talk to the buy side, they say the performance pressure is brutal among the active managers, especially, squeezing every basis point it matters more than it used to be. And so we're tending to dig a lot more into the weeds on the TCA side. And so, and especially on the real-time TCA, we do a lot of, checking out the post-trade reports, and we try to generate some insights from that, but it's difficult, a lot of headline numbers. It's hard, but, real-time TCA, you can actually change your trading behaviors intraday and actually could, uptick the performance outcome based on that. So it's really important, the ability to deliver the real-time TCA in the EMS. And so, Amol, what are your thoughts on, your ability to use real-time TCA, algo wheels, and actionable analytics together to help you with a feedback loop intraday that will help you generate, performance opportunities?
Yeah. So our analytics group, which is trying to understand all the data that we are going to that we have been collecting thus far, and moving forward as well. Our thought was initially not engaging in intraday level changes to the wheel based on our analysis. At least initially, our goal is, let's do it on a monthly basis or so, and as in how we have enough mass of data that we can pinpointedly figure out what's working and what's not. Based on that, then we can probably close down our window from 1 month, maybe, right, initially, to weekly, or as we go towards the daily purpose. But the system wise, it is built to handle that scenario. The way we have built our system is such that anytime during the day, any of the parameters on our algo wheel or in our system can be changed without affecting anything, like in the sense that orders can be sitting there, parameters can change behind the scene, and everything gets and whichever broker we need to send, all of those things are like they run on the fly. Even broker additions or subtraction, or if we want to subtract from remove anybody from the wheel or add more weightage on any particular broker, all of these can be done intraday. So yeah, our system is seamless and built to that. From the journey perspective, we are just not there yet to start adding to make those changes on a day-to-day basis. We are thinking more so on a monthly basis at this point.
Do you have concerns that your algo wheels and the data that gets generated through them, that that they may deliver false conclusions? Do you have concerns about that at all, or?
Yeah, essentially yes. So that is our initial, or rather, as I said, being conservative, we are more cautious about this, and we just want to tiptoe into this area. And we are concerned that maybe a couple of orders might show some result which is not really reflective of the current actual state, and so we want to get into it very cautiously, and which is why that the time frame will shift as we get more and more confident about it.
I see. Okay.
Michael, I think one of the big use cases for real-time analytics is really, again, it's probably less about automation, although I think they can be really helpful to spot outliers in automation. But I think, real-time analytics, in my mind, visualizations for a trader that really contextualize a situation quickly, where they're able to, pick up on the relevant information about how is the stock trading today? How is it different than its historical usage? How might my algos behave a little bit differently today? What are those deltas? How does volume look? What sort of predictions can I make about how it's trading today that might be different than a typical volume profile? But I think, to me, I guess they're providing quick context for traders to just make better decisions around the margin, rather than really saying, I thought I was going to do this with an order, or I was doing this with an order, and now I'm going to go 180 degrees different. I think for me, it's a lot more context and just reducing that swivel chair. If I can provide a little mosaic around the backdrop or the context of how an order is trading and do that quickly, I'm just making traders more efficient so that they're not, looking at 5 or 6 different screens. You touched on the interoperability bit a little bit. I think that's another example of where, the platforms, if they're a little bit in sync and can sort of create efficiencies so that traders aren't checking multiple systems all at once to take an action on an order, then we're going to improve performance over time.
Mm-hmm. And to what extent, because you have hedge fund traders, you've got long onlys, and you have those that do multi-asset. To what extent, is your platform for real-time analytics, that is it customizable so that, if I'm coming in from a different direction, it might be completely different from another trader? How to what extent can I really customize the TCA, the real-time TCA tools that matter most to me for this particular strategy that I'm working? And back to Tom.
Is that a follow-up? Sure.
Yeah, follow-up.
I think that, again, that would be, for us, in our real-time analytics anyway, the content is available to all sort of the same way. And then it would just be, and I talk a little bit about a mosaic. I think different traders would be interested in different information. And so you're really just sort of assembling the content on a dashboard type of thing that one trader would want versus the other. But that's, it's largely configuration. Mm-hmm. And then similarly, I think, outside of the real-time analytics, which in our case is sort of a, it's a separate container, but tightly integrated with what's going on the actual EMS platform. The EMS platform then as well has, sort of layouts or profiles that might be, that you might adapt differently for different types of traders with different workflows. So a PT guy might be looking at screens that are quite different than a single stock guy. You might arrange screens differently if, someone's trading both of those things or pairs or, complex options or whatever it might be. So most of that is just, configuration sort of built in to match a workflow. And that's done fairly easily, both on the EMS platform as well as the analytics.
So I have a question for RJ. What do you think are the pros and cons of, traditional rules-based automation and tools versus your machine learning based techniques?
Yeah, sure. And we see, and especially there's a lot of marketing around where machine learning can be added into fintech processes to create efficiencies. I think at the EMS level, we don't see that as much. Like when we're building a strategy selection matrix for a customer, typically that's thoughtful. And it doesn't mean that it doesn't have the data necessary to ensure that you're not misrepresenting an order. And so same as Tom, you look at the historical profile of a stock, you look at what's happening intraday in terms of the volume, volatility, and spread. And you may have in your rules matrix an adjustment you make in the case that a market is way overheated or if a name that you expect to trade wide. It's going to change the behavior ultimately of the strategy you select. But I don't call that machine learning. That's just a good use of data. Machine learning, it's best used when pathfinding is ultimately the task at hand. So for an algo, certainly you want it to have the memory. You don't want it to have amnesia about where it went and found toxicity or where it went and found great liquidity. So there is that feedback loop, that pathfinding that an algo can do, and certainly should build that up over time. And I think that that's more than marketing. I think that definitely finds a place and lands in the execution edge of a firm's workflows. But back to my first point, even for our most complicated firms, there's very complicated reasons to trade, but the actual implementation ends up being typically quite simple. And you want that TCA feedback, right? When you introduce more variables for how you're changing orders, you're less likely to have statistically significant data than to analyze whether or not it was a good choice. So we find firms that even if you read the names, you would assume that the ways that they trade would be infinite, that it can fall into just a small number of categories that they're thoughtfully managing on a post-trade basis. So yeah, I don't think machine learning is just marketing, but yeah, on a software level, I don't see that permeating into what we do specifically.
Mm-hmm. You talk about like some cases, where there's, concerns that there's, there lacks statistically significant, results. Is there a warning that you provide to clients on certain results that come through and say, warning, this is statistically significant because there's a lot of data, this is not statistically significant, so please take with a grain of salt? Do you do that sort of work for clients so they can delineate?
Yeah, and I think Amy said it, and if I'm misrepresenting this, I'm so sorry, that it actually, this automation brings the buy side and sell side almost closer together, because you have the time to spend on the conversation as opposed to being stuck in orders. So, actually it brings people more to the forefront, right? Like you will have sharper deals that you make, because now it's much more about ensuring that the data that you're looking at is correct, that there's less bias in that than necessarily just clicking all day and looking at a benchmark on the screen. So it's the opposite happens, right? You think that automation reduces the need for the trader. It actually just changes the need for the trader. It's more about performance-driven trading now than it is somebody that knows every key on hotkey on a keyboard. So that's that. But I think it's actually quite clarifying for what we should be doing and interacting with each other. But certainly, we warn customers that if they have goals for an algo wheel that's more than just fairly divvying out credits, that it really needs to be a main part of that investment process. It can't be just a side pocket, because you'll never really know whether or not there are changes that you're making that are truly affecting performance. But we have customers that start with these small experiments and things go well, right? Like they fear automation until the day that they're very busy or there's a very difficult order, and then they realize the value of it. And we see customers only then upping the amount that they're willing to put into this. And I think Amal mentioned, I'm sure that there's aspirations to continue to climb up and see how much can be put forward through some of these processes without a trader touching everything, and still get that human aspect to making sure that the orders are safe.
The one thing I'll add to that is, like, when he talks about, pathfinding, right? We're always kind of mentally conditioned to think in a singular fashion, one order, one benchmark, right? What automation allows is for taking multiple streams of information, data, right? And allowing to correct course, essentially like Waze, right? There's traffic up here. Maybe intraday, you're not really trying to analyze performance, but you're trying to analyze best path to completing that benchmark. So I might be in an algo in an order, the volume's half what's what expected, it's twice as much amount of spread. And again, like through stochastic optimization, using different machine learning type of effects, where it's like, you know what? I know I can get a risk bid for this name using a central risk book for X. Okay, let me correct course. Let me just do a risk bid on this name here today, right? Or maybe I'm collecting in from the sell side indications of interest, right? And instead of a human reading it, I have a machine reading it and say, here's a condition. Okay, let me pull the order from this algo wheel and send it to this broker to get executed, up 2 cents or whatever it might be. That's where it is allow for it. So the path dependency becomes, multidimensional, because you're reading in multiple streams of information to allow you for a better optionality and choices. And a human can't do that, because, we wouldn't be able to collect that information. And then the other thing is the feedback, right? Okay, was that successful? And I think that's the key about it. It's not intraday analysis. And by the way, real-time information, transactional data has to be real-time. These next day extracts is a waste of time. And I think from a regulatory standpoint, it's the path for us to be able to really analyze venues and, if there's conflicts of interest, and venue selection, and we can, there's a way to do that. And so I think we really need, as an industry, to really push for that.
You're absolutely right. I mean, we're getting a lot of the tags on the venue level that comes through on Fix. And so, but are they coming through where there can be analyzed intraday? Like, am I seeing a lot of my slices going to this dark pool more than I would like? Is my slices, am I generating or not generating rebates more or less than I like? These are tags that come through. Some are estimated, some are exact. I know some of the bills on some of them, they take a little bit longer, but there's estimates that can be had. But being able to deliver this stuff intraday on the venue level thing, that does help you inform your trading strategies. And so you start thinking, perhaps your idea was, okay, let me try to earn some more spread capture. And then all of a sudden I'm like, oops, I'm getting a lot more adverse selection costs that are overriding the other costs. So maybe I should switch gears more and be a little bit more either midpoint or aggressive. That sort of level, that venue level data. I mean, are you seeing that being, and then to the point where you can visualize it and act on it intraday? I mean, where are we? Are we all the way there in terms of where we want to be as far as that's concerned, or is there more that needs to be done?
If the question's to me or no other people,
to you.
I think it has multiple impact. One is from a visualization standpoint, right? Especially in like very liquid, widespread names, you want to know the status of the order, right? What's going on now? A lot of EMSs that are owned by a broker dealer have their own strategies, or if you're a large enough asset manager where you have your own built-in strategies, obviously you can know where are child orders being placed right now currently, how many are getting canceled, what's the state, most asset managers only get what the fills coming back, but you don't know what's going on in the marketplace. So it's a way to understand what's the current state of the order. And then the other part of it is again, let's use machine learning. You learn from, if I see unusual activity, like an order, like seeing hundreds of thousands of orders in a name being placed, I'm like, hey, is something going on with your strategy? You're sending out thousands of, conditional orders, whatever it might be. Is everything okay? And not a human doing that, but a system get alert and then they ask the question. That's a market maker. That's what they're doing, right? They're like, hey, this gateway, there's a problem. They know a problem before the exchange might know they're down, right? So it's the same thing. It allows us to audit it. So, I think there's a lot of opportunity, and it's not us qualifying if that venue selection is correct in performance. It's more about situational awareness, right? Just like in the military part of it. What is actually going on? And I can be alerted first. And then, then historically I can start to evaluate it, right? And a key part of it, again, I want to, the last thing I'll say is the brokers need intention codes, align behavior with action. We don't have that. I know Virtu has that, and I know Instinet has it, and we're trying to expand onto that, but that needs to be done. And then this whole transactional, issue as far as, conflict of interest because of maker taker, it goes away because now you can evaluate those actions, based on what am I trying to do?
Is there a
Enrico,
fixed standard?
just one.
Sorry, Enrico, is there a fixed standard around intention code? Is that
that's the big debate. Do you isolate it, or do you allow for innovation? The beauty, and I get back to this fixed orchestra. If you go on, fixedtrading.org under fixed orchestra, if you use simple binary encryption, machine readable, allow you create a metadata file and it say, okay, for Morgan Stanley, here's your intention codes, and I'm going to map it to what I view as a qualitative action of what you're doing. Whereas, whether it's Virtu or Instinet or whatever, it does. But the other key thing is why you want this flexibility, because you might outsource to a third-party smart order router, right? And Morgan Stanley might only have the algo container says, I want 1,000 shares, and I don't know where those 1,000 shares go. Pass it on to a smart order router, and a smart order router determines what venues it goes to, right? So now you have multiple intentions, right? So that's where the multidimensional comes from. So the question, the answer is allow, create a lot of a kaleidoscope of intention codes, but you can, it's like 851, right?
Yeah, come down to 4.
9730 is, you're going to get much more understanding, but we can map back to a much more simplified mechanism.
Thank you, that's helpful.
Yeah, I wanted to ask you a question. Now that I wanted to touch a little bit on the multi-asset side. I've been hearing from not only from the media, but from the buy side, from the vendors. There's a very strong push to get up to speed on the multi-asset trading capabilities. But when I dig deeper into conversations with the buy side, they're not quite there yet. It feels like almost the vendor space is slightly ahead of the buy side's needs. May, what's your thoughts on this? Are you seeing a lot of pressure from clients to push into the multi-asset space?
I think it depends on how you ask the question. If the question is, for example, FX, is FX an asset class you trade? The answer may be no. But if you ask the question, how do you think about FX? Then it very much does come into play, right? From, for hedging purposes, et cetera. So, it's interesting to me over the last, and I've been in this space for about 10 years now, and the amount of inquiries, invoices that we get for our FX business where we haven't had the conversation, contracts that come into us because we're the known counterparts, but we definitely see the frequency and the number of players of having the conversations and inquiries about FX has definitely crescendoed. I would say this year, certainly, in 2020, but all things being odd in 2020, it's certainly, most noticeable in 2021. So I think for clients, are they fully ready for a new platform? No, I think what they're looking for, and again, just coming back to, efficiency, interoperability, they're looking for a way for their platform to deliver to them, can I please just get my international trades seamlessly FX into day and give me the price and the FX rate without making 5 phone calls, right? And that should be a simple ask, but it's not easy to get there. And then for more, complex FX interactions, we can certainly, introduce our clients to our, our team in our EFX department. But I think, it's really more of just having a universal wrapper that fits very nicely around the various workflow demands of a client without, disrupting the existing business. And I think it is worth mentioning that, through our, our robust PB pipeline, we do see, in the AUM, the average AUM is smaller than it used to be. But those smaller AUM clients are still trading internationally, and they're still trading multi-asset, and they do want FX. So even though, the size of the client may have decreased by AUM, the complexity has not. And I think it's, our jobs collectively to deliver that seamless solution.
I see. Tom, are you getting the same sort of feedback from clients in terms of the pushing you to get into the multi-asset space, or is it still just a lot in the media, a lot of media attention and whatnot? What are you seeing on the ground, in terms of your communications with clients?
Look, I think the certainly the bigger shops that just have a more diverse, portfolio of sort of services they offer out are more interested. I think that we see it more out of Europe. RJ actually made the connection. We were talking earlier that that could very well be MiFID driven, where the standards for best X, if you can do that, you're more efficient doing that if you can sort of do it in one place or with one set of data, and those practices sort of, can emanate out of a single platform. So I think the desire is there. I would also say that the trade-offs are, Instinet's been an equity shop forever. That's where we've sort of put our investment in our IP largely. We've extended to things like FX and futures and US listed options because, those have been good for our equities business. I think it's really hard to, does anyone have a goal to say, I'm going to be best of breed in every asset class out there, or even every listed asset class? I think it's a tough order. So then your question, then the question is, do you run your product strategy against something that's like broad but shallow? And I'm not sure that that's a winning recipe either necessarily. I think we know directionally where the trend is going, how fast it's there, and what sort of adoption rates will we see where, multi-asset is an absolute must, or, full multi-asset is an absolute must. I think is a little bit more debatable.
What are your thoughts on this, RJ?
Yeah, I think about, you look on a highway, all the different types of vehicles there are on the road. And I think at the end of the day, our industry tends to look a lot like that, where you're going to see platforms that are multi-asset because their customers demand it. A lot of the times it just comes down to expertise. Building access to an asset class sometimes isn't as difficult as it is managing customers that speak a certain lingo, a certain language, because they're deep into that asset class. But what I think you find is that there's always going to be, as Tom mentioned, kind of a balance. You're going to have larger generalist firms that just need that access because they want their data in one place for best X or for other reasons. You're going to have firms that believe their strategy is that they're better and faster at certain types of trading. And you're going to find those folks always attracted to a platform where they believe that when they pick up the phone and speak to somebody at that vendor, that they understand the strategy of that firm. So you're never, you'll see in the marketing this idea that you're going to get to like the portfolio order execution management system that's one for all. It'll never happen. Now, certainly you have to do what your customers need you to do, but there's always going to be a competitive edge that someone's looking for that only a certain vendor is going to offer. And we just try to effectively be flexible enough to be competitive and be relevant for what folks are trying to do. But it doesn't flatten. I think data management may flatten. I think that these systems may be forced into a situation where data management players demand all of the data in one place. But the trader's desktop, no, it will continue to always be a diverse marketplace, but that's probably a good thing.
Understood. Okay, looks like our time's up.
Yeah, thank you, Michael. Thanks, Michael, and thanks to all our panel of experts. I think we could have quite easily gone for another hour, if not longer, just on this topic. It's really good to have all of you speaking and sharing your insights. We will share the recording on our YouTube channel shortly. I do believe we've got some slides just about to start. For those who are members of working groups, you may already know, we've got many of them. If you're not a member of the FIX trading community, we have these working groups that we have running. They will be tackling topics such as the one discussed today. If you'd like to join one of the working groups, please visit the FIX website and register. We also have some upcoming events. The FIXinar series will take a short break over the summer and resume in September. Topic is around repo and blockchain, and there'll be some further information to follow. Finally, I'd like to thank Internet for sponsoring this episode. And if you could complete the survey by scanning the QR code, we'll keep this up for a few seconds, just so everybody can give their opinion and feedback, how we've done, how the topic has gone down. And finally, thanks once again to our experts and to Internet, and enjoy the rest of your day.
Thanks a lot.
Thanks all.
Thank you, everyone.
Thank you.